So here today with Natu Myers for Blockchat episode number 8. Natu is a blockchain investment consultant at Natu Innovations Inc., based over in Ottawa, Canada. So Natu is doing a lot of work in the space right now, the blockchain space, to raise capital for interesting blockchain companies. And this essentially is an international operation, but he's actually based and certified in Canada, Ottawa. So I wanted to introduce Natu today. Saw him on LinkedIn, posting some really interesting content and making some really good noise. So I thought Natu should come online and have a conversation about what he's seen in the blockchain industry in terms of investment and in terms of raising capital. So Natu, how are you?
I'm doing pretty good. Thanks for the introduction, Hasani. It's nice to be here.
Awesome. Is there anything you'd like to add to that introduction?
Well, I mean, you got the crux of it. You got the core points. Is that it's a journey, and it's also making steps, and it's a process to get certified the company. But I'm still working with local securities laws to get this fully up and running, so I can actually facilitate those introductions. In the meantime, I'm making good progress on getting the right pieces in place.
Yeah, it seems as though you really are taking steps towards innovation with creating a blockchain investment fund, essentially, because this hasn't really been done before. I think in terms of the complex funding models that blockchain industry can actually use, is that the reason why you've had to go through a quite long process of building up a whole new way of doing investment?
Well, I mean, it's really interesting because the way that it happened was it was a simple iterative process where I didn't even come in I didn't come in saying that I was going to even do this. I came in with the mentality that, okay, I'm going to solve a big problem that many people have in the industry of blockchain, because that's where people have seen that they need my help. And I've just iterated from education to this. So it was an iterative process, and I had to take market feedback and readjust my offer until I saw the most valuable thing that I could offer people. And eventually led me into this direction.
Okay, that's very interesting because you mentioned some problems there. And what are the key problems you were seeing in the industry in terms of raising capital?
Yeah, I mean, the biggest problem is, startups in general, right? Like, is that initial phase where, you have, there's two types of companies. Some people say there are two types of companies, right? There are some companies that are really, it's a big idea. It's really capital intensive because you have to pay a development team, and, you have no initial revenue to get to that large annual reoccurring revenue. And there's this big gap. And if you don't have the money to bootstrap yourself, then you must seek external funding to get to that. Or there are other companies that are more, lightweight, and they're more service driven, and you have a lot of upfront cash, but sometimes you can't grow as big because you don't have that, you don't get those large investments. And so in the first group, in blockchain in particular, there's a real misunderstanding with how blockchain works in the traditional financial sector. There's almost an adversity to it, and those who aren't adverse are really curious. And so, that's part of the reason, especially during the bear market and the complexities, why there is a lapse and a lack of investments heading towards the good companies in the blockchain space.
Okay, so what do you think defines a good company in the blockchain space?
Well, I mean, first off, I'd say that it has to solve a problem that many people have, right? So it has to be, it has to solve a problem. It has to be, from a business point of view, it has to be able to solve this big problem. And in doing this, be a viable business where it can generate returns, yes. And the fact that the problem is being solved has been proven by either different participants, by different smaller versions of the project. So basically there's proof of it actually working as a proof of concept from a business point of view, and for actually solving the problem they claim to solve. So that's one of the biggest things. And a lot of people, seek the capital and seek these things, but they haven't built a project that has been proven to do such things. So I mean, that's probably the biggest one. And in talking to a lot of these VC firms, yeah, people like it when um, you know if it's a bit later stage, if it's proven to be able to solve such problems. If it's promising, if the pitch deck is promising, and if they need to validate that market and it's really early on, perhaps like a high risk VC or the incubators would be interested in such projects.
Right. So for the average investor, do you think that the complexity of blockchain, the technology, the information, the idea of blockchain, do you think that for the average investor, they'd be comfortable investing in a blockchain company compared to a standard, well, I say standard, but a more easily to understand technology company? So do you think that blockchain companies are different to invest in compared to normal tech companies? Again, I'm careful with my words because I say normal very, very loosely. But what I'm saying is that, do you think that when somebody says, "Oh, we're a blockchain company," does that automatically make it seem different compared to other types of investment?
Yeah. So I mean, the problem is that the fundraising mechanism has evolved, right? And in 2017, I always say how in 2017, Ethereum came out with their ERC20 standard and then several other protocols. And all that means is that, one blockchain made it very easy for for projects to create their own tokens. So this has been used as an alternative fundraising mechanism that isn't regulated. And, from there, it's really when people say blockchain companies looking for investments, people aren't sure whether you're talking about a traditional fundraising round, venture capital, or if you're talking about initial coin offerings, or if you're going through the STO routes, i.e., a regulated version of an ICO, or you're going through an initial exchange offering, which is the same as an ICO, except the exchange kind of facilitates a lot of the listing and the control over the project for a certain amount of time. So that adds to the complexity, I would say, probably most of all.
Yeah, for sure. Because I think that we all saw what happened with the ICOs in 2017, 2018, where there's this big, massive money just being pumped into these very interesting small companies with interesting pitch decks. And then you see everyone go away and buy Lamborghinis. I think the SEC, a lot of these regulatory bodies have been thinking more carefully about how to actually raise money in a safe way for the investor and in a way that the company is then going to be liable to actually take action to deliver value. And it seems as though this IEO is an interesting concept and seems to be taking a lot of that complexity out of the investment process. Is that correct?
Yeah, to some extent. I mean, like I've been approached by a lot of companies doing IEOs and telling me how they work. So I mean, a lot of it would be, some have very high standards in regards to the projects they accept. It's kind of like a vetting process, and others, have a high fee. And
what kind of fees in general? What kind of fees are we talking about?
Well, I mean, I've seen some companies that have, let me think, off the top of my head, 100 BTC. Yep, 100 BTC.
Wow.
There's a range, like really big range. To 5 BTC. And this was back in, well, I mean, this is now. Like, I know companies that are doing anywhere between 5 BTC to 100 BTC. Like, so, I mean, some of that goes into, like, it's so complicated, right? Because some of that goes into, the market making that the exchange would do in kind of moving the price. Some of it just go down into just a fee. So, I mean, it's a mix. And, considering the hype associated with it, I don't know how sustainable it is because, if blockchain projects are to be, trusted and all of that, then, and people are worried about exchange hacks and about the centralization of leaving your coins on exchange with Quadriga here in Canada happening, then, yeah, it's hype for now, but I don't know how the problem of decentralization will be solved with that.
Yeah, sure. And just for our listeners, 100 BTC fee to list an IEO equates to roughly £500,000 in the UK. About $600,000. And would you like to also elaborate on the Quadriga issue that happened in Canada?
Absolutely, yeah. So, I mean, the owner of Quadriga, reportedly went to India, and Quadriga is a cryptocurrency exchange, so a place where you buy and sell cryptocurrency. And, he had access to the cryptocurrency wallets in the exchange because when you use an exchange, you don't own the so you have a private key and a public key for every cryptocurrency that is on exchange normally, or that every cryptocurrency, right, has two keys,
Yeah.
private key and public key. But the exchange has access over private keys. Hence why exchanges are really vulnerable to hacks. And in this case, Quadriga's CEO actually reportedly died in India, and he had access to the private keys, and the company is declaring bankruptcy. And people are like, I know somebody, well, I don't know him, but somebody lost 200,000 of his life savings. So
that's scary, isn't it? Yeah, that is really scary. I mean,
yeah,
that's the inherent risk, isn't it, when dealing in this industry, is that a lot of this isn't regulated and isn't insured. So when someone dies and loses all the private keys, and of course it's tragic and horrible, but because people can't insure their capital, what do you do in that situation?
Yeah, I mean, people in my network are always saying how there's a quote, and it's like, if you don't have access to the private keys, it's not really your wallet. And it's really interesting with the power that is all the power of the cryptocurrencies being launched via IEO, initial exchange offering, on an exchange. How so much of the power goes into a subjective kind of opaque process of listing these coins, which it kind of is contrary to the whole points of blockchain and radical decentralization, which is really funny.
Yeah, for sure, because that doesn't really make it decentralized if one exchange has all the capital, all the power, and all the coins regulating them themselves. That isn't actually decentralized. So, is there a better way of doing things, do you think?
Well, I mean, I always like looking at Decred and VeChain and looking at how they have a governance structure. So, I mean, VeChain and Decred, they're two cryptocurrency projects that I always refer people to when talking about good examples of decentralization, because there's a really clear voting process that goes into, based on how many tokens you hold. So cryptocurrency token, you're able to openly vote and openly discuss and openly have a stake in what decisions are made in the public. So you can determine prices on things, what gets listed in a very open way. So, I mean, if an exchange was built from the ground up with this kind of, approach, that'll be really interesting.
Yeah, for sure. But of course, there still could be whales that buy lots and lots of tokens and then make it centralized.
Yeah, no, it's fascinating. Like, the problem of decentralization, I go back and forth, because different ways of validating blockchains, like proof of stake, make it so that the more tokens you hold, the more power you have. So how do you disincentivize somebody from just having the most amount of tokens in that scenario? People have done several things, but it's really interesting how it's like Animal Farm, right? Maybe we're going to go back to the old cycle. Who knows?
For sure. And so, in terms of projects, then, have there been any projects that you've found particularly interesting that are really pushing moving the needle in terms of the blockchain space? Because I was speaking to a gentleman recently, and he's actually an investor as well, and he seems to think that blockchain companies, for the sake of blockchain, don't actually, or may not actually, confer much value. Rather, he looks towards companies that actually implement blockchain invisibly and are just companies, as opposed to being blockchain companies. What do you think of that?
Oh, so you mean he invests in protocols, not companies, is what he's saying, right?
Yeah, essentially.
Yeah, I mean, I understand what he like that approach, because I've seen three mega trends in this whole industry based on I started by making reports for groups of day traders and swing traders via a company called Unify, and they do this in a non-advisory, SEC compliant way. So, I mean, based on all of the reports we've generated, I'd say there are three megatrends, and one of them is solving the quote-unquote blockchain scalability trilemma. So, long story short, making blockchains better and faster, more decentralized and secure, and making it non-compromise. And I've also seen projects that are trying to solve the problem of interoperability. So, I mean, helping blockchains connect to other blockchains. And third trend, I'd say, what is the third trend? I'd say just overall user friendliness. So, of those three mega trends, I'd see just find the top contenders in all of them. And I'd say, for the example of scale, I'd say one example that's good is, Eternity is a good example. So, I mean, that's an interesting project that tries to address all three of these things. Aeon is also really interesting because they focused on interoperability, but then they shifted more towards user friendliness recently. So I mean, yeah, just look at the projects that are the top of these mega trends that you're seeing amongst the blockchain projects.
Right. So in a nutshell, interoperability, user friendliness, and security at scale. Is that the three trends that you're seeing are being worked towards in terms of building new solutions?
Yeah, and then the last point is more like it's like a trio of scale, security, and speed. So those are the three big pushes that are coming out of 2018 and going into 2019.
Right. So say if, for example, I was an investor and I've came to you, you have information about the space. What would you tell me as an investor about how to actually invest, how to analyze, how to understand whether a company is going to actually confer value and actually yield a profit? Like, what do you look for? What should I look for when looking at the financials or the forecast or the outlook of a particular company?
Yeah, I mean, when it comes to that sort of stuff, similar to what I was saying before, one would, and this is, again, OSC compliant, all of that, not financial advice. But, what I would say is to, make sure it's solving a problem. And I think if I were to ask this one question to the project, what problem is it solving? And, when people solve a problem, then there's a transfer of value. And if that value, if the problem is big, then the value is big. And, is there proof of that problem being solved? And all of that questions and all of that in the three mega trends. Also, I watched a TED Talk, a good, the director of technology at Unify actually showed me a good TED Talk. And he was mentioning how market timing is actually more important than the team, they said.
Right.
Because, you look at MySpace and you look at Facebook and, you look at all of that, you look at how the timing was super important. And, at the companies that launched right before 2017's boom, such as Augur, Waves, look at their position now in the charts. They remain in the top 100, top 50, etc. It's very rare that you see a project before those times, before the 2017 boom, have a stronghold in the market. And so I'd say market timing is very important as well.
Right. And I want to understand as well, why do you think that these companies like Waves, Augur, Eternity, why are these companies, to the general public, to the average layperson, these companies don't exist to them? And why do you think these companies are still in this mystical realm of crypto space and blockchain world? And when do you think these companies will actually start delivering services and products that the average person will use?
That's a very good question. And I'd say amongst the projects that are attempting to solve problems, the problem of the scalability trilemma, speed, security, and scale is, some people argue that that's one of the reasons why projects, like, you can't use cryptocurrency in real life in Canada. Like let's say I want to buy I want to buy a protein bar or something. You can't use because Bitcoin takes 15 or 10 minutes or whatever to go through the blockchain network and validate. I can't know if the transaction is confirmed in that 5 to 10 minutes. But until a blockchain project comes and then solves that problem, then you would see a real use case, and you'd be able to use money without anybody knowing, or without it going through one server, or without going through one bank or one chain of banks. So when you start seeing these blockages to adaptation being removed, then that will happen. But in the meantime, we just see Bitcoin because, it's the first one, and
highest market cap as well.
Highest market cap. And, it's just like it's the same pattern, when you see with the .com boom, a lot of people would believe that we're in the pre TCP/IP days of the internet. So TCP/IP is just one of the protocols that created the internet. And until then, everyone is just kind of building their own blockchain projects quietly in their own networks. But until it goes mainstream and those big problems are solved by a valuable company, then it will remain this way.
Yeah, for sure. And yeah, that's really interesting. And I think in terms of barriers to scalability and barriers to implementability, I'm not sure how it is in Canada in terms of people actually adopting this for day-to-day use, but even over here in Europe, we're not really seeing anything in that way happening at all. And I wonder how long it will take before we actually start seeing these solutions being used day to day for the purchase of protein bars, for example. Yeah. And so I wanted to ask a bit about regulation, and also the legal issues that surround investing in these kinds of companies. Obviously, you mentioned briefly earlier about STOs, IEOs, ICOs, but what is the general landscape right now for investment in terms of these companies? Is it still seen as quite a gray area, or is there more support now by regulatory bodies?
I mean, it's a mix. And I'd say one of the issues is that in many jurisdictions, the securities law is often principle based, meaning that there are no hard and black and white truths. But I'd say when it comes to ICOs, here's how it works, right? There are security, so people label it as either security tokens or utility tokens. And security tokens are cryptocurrency tokens that are a security. And now, what's a security? What's a security? Well, I mean, when I dug into this, it was like, oh, it's any assets that has to be regulated by the government. So like real estate, equity, etc. So that means that, okay, then that means that security tokens are securities. So then what's a non-security token? How do I trade cryptocurrency without being a security? Well, utility tokens. So then in 2017, early 2018, people were like, oh, let's make utility tokens actually have a real app use case, and it's just an app. And this is what a lot of companies did. I've seen a lot of companies, like I wouldn't call them out, but we're a utility token on the white paper, everything. And in some cases, the SEC didn't cut it, right? And now what happened was people started immigrating to STOs. Okay, so let's do a security token, but let's do it as an STO. And then what I believe is that people got really frustrated with how long the government takes to make sure it's compliant, and then that's kind of, so we're in the limbo between that and IEOs, where all the risk is taken by the
exchange.
I believe it's some of the risk. Yeah, exactly. So I believe that's how it will work. And some companies in America, like I have an NDA of a few, but one in America that is working with such such projects to handle all of that.
Right. Yeah.
So we're split between IOs and STOs.
Yeah. So we're kind of caught in this realm between IOs and STOs, and the main problem with STOs being the sheer time and cost required to validate a token as a security via regulatory bodies. Is that correct?
That's part of it, and it's just the overall, the complexity of making sure it's compliant. People just run away from that, and I think people should be open to regulation if you want it to become adopted. But the reality is that, yeah, I've seen venture capital firms and everything run away from the concept of STOs.
Right. Yeah, and that's the reason why you're doing what you're doing, right? That's essentially your work, is trying to facilitate, trying to make investment into blockchain companies more attractive to VCs. Is that correct?
Yeah, and I've run into a legal blockage myself because I got 8 groups of investors, over 7 billion in assets under management, including their groups, everything. So I mean, but the companies were on the other side, and I was like, oh, I could connect them, but then it's like, wait, I can't, because this is serious. Go through the regulator, right? And so that's because it's a mix. Not only because it's a mix of equities, it's because you also have cryptocurrencies as well, which in some jurisdictions are regulated, and some there aren't, and some they're utility, and some they're not. So it's might as well just do that, right? And so that will add some friction in people moving forward with helping the blockchain industry, I believe. And it's just a matter of going through that friction.
Right. So I think I understand this now. So we're saying that because of the nature of blockchain companies with tokens and securities and the time taken to validate, to make the token compliant, and the risk that comes with blockchain companies, and the non-adoption of blockchain companies' products and services, and just the general uncertainty and this gray area-ness that comes with the investment type in terms of blockchain company, this makes all of that unattractive to conventional VCs that have conventional methods of investing in tech companies. Is that what we're kind of getting at here?
I believe so. And I believe, you have a small outlier it's funny I say outlier because there's actually a venture capital company called Outlier Ventures,
Nice.
and there are several that are, I believe that they've transcended all of this, and they have, jumped right in and looked at different protocols, like, origin protocol, different protocols, and they've invested in them because they have the necessary relationships, and they know, they understand to get it. They watch this podcast in advance to get it, and they have they're investing. And this, I believe that kind of like, these are the species of venture capital companies that will win if blockchain is to become what people believe it can become.
Yeah, for sure. And for example, the likes of Outlier Ventures, they're thinking bigger picture. They're thinking more about the protocol itself. And you mentioned that word a couple of times now. And yeah, I think for listeners, it's good to just differentiate and make clear what a protocol is versus just the company.
Yeah, no, absolutely. So, I mean, all this is just code. Like, all this blockchain stuff is just code, right? And, here's a good example. So there's one called, what's a good example? So there's one called 0x protocol. Is it 0x protocol? Oh, no, Raiden Network is a better example. So Raiden Network, so Ethereum is a bunch of code. And the thing is that the bunch of code, there's no jurisdiction, nothing. So what people did, they built a foundation, I believe it's non-for-profit. I'm not sure, so I'm not going to say what it is, but a foundation to kind of, to say, okay, who do I go to if this happens? And you have a company and a foundation. But the Ethereum is the protocol, so the protocol is the code, right? And so that's the difference. And the value of the blockchain is different than the value of the company, right? And that's basically it. It's just a bunch of code that the foundation, will be responsible for voting on who writes the code, who does this to the code. And the key is a separation between the code and the company. And because the code is the one that is the thing that's making the tokens, it's a place where tokens are sent out and there's a market with them. An example of a good protocol will be Raiden, that was another protocol that improved upon Ethereum by making it faster. And so an investor would see that and get a lot of Raiden network tokens. Or get a lot of Ethereum tokens, right? That's how it works.
So, okay, that's awesome. Thanks for that description. So, say I'm starting a company tomorrow that does blockchain for lampshades, for example, or I don't know, some kind of lampshade coin, for example. So we're saying that the protocol, basically, I would then use Radon protocol in my company's code design process, and essentially I would then pay Radon protocol to use their architecture, their protocol. Is that kind of how it works?
Okay, so you made the lampshade blockchain yourself. So you made the lampshade blockchain, and you're using Raiden. Is that what you're saying? I just need to understand.
Yes, I'm trying to understand how this works in terms of the protocol versus the company. So the company has a vision, has a solution, and we're saying that the company then goes to Radon network and then uses their protocols, buys their software architecture,
Exactly.
their coding architecture, and then the company is the lampshade blockchain with Radon protocol bolted onto it as the architecture for information propagation. Is that kind of what we're talking about?
I mean, more or less. I mean, the whole thing is that, like, I talked to Bitcoin Benny a while back about what's at Komodo, right? And Komodo is another company. And so the thing is that here's a good example. They're very decentralized. Like, they just had, they had the project, they were cyber gauge. I forgot the term, but they're very, very decentralized, and they didn't want any government intervention, nothing.
Right.
Channel777, he doesn't even have his real name on the thing. His name is James, and he has no picture, nothing. So that's the decentralization. But, Bitcoin Benny, came in and he said, okay, guys, we need investments. We need investments and traditional investments because we actually have a company. We can make this code into a company. And so he said that, I'm going to establish a foundation, a company where I say these people are the ones that you talk to for legal reasons or for this. This is who we talk to for investors. This is who we talk to for any copyright issues. It's just to put it in the real world and make a of it. That's all it is, right? And typically these foundations, best case for decentralization, they're they're not private companies, they're open source, because open source companies can make a lot of money through the protocols. However, many of them are private companies, which is okay as well. Just that typically wouldn't be as open, right?
Right. So Radon Protocol, is a foundation that people go to consult for issues to do with building their blockchains. And then they can also purchase parts of the Radon Protocol to implement into their blockchain company to validate their company's system use case, and also to be more attractive to investors. Is that kind of accurate? Is that kind of correct?
Yeah, more or less. You kind of got it right, because otherwise GitHub. So GitHub.com is where people publish code quite often, and otherwise GitHub.com will be the only way of knowing who is coding it. And there's no, people need salaries, people need T4s, people need all of this, and we live in a real world that is still traditional. So it's about marrying the two.
Yeah. Because I'm just trying to really understand the protocol nature as a part of blockchain. I think I've got it, but could you just really drill down the exact nature of a protocol versus the company, please?
Absolutely. No, absolutely. Because when you invest in a company, you're investing in a company's like shares, most often, right? Common shares or preferred shares, right? Which just mean that, so common shares, and I was just reading this today for my certification, actually. So common shares is just, when you invest in a company to either get dividends or to get like a part of the company. And the money that a company has is reflective of the, what their profits are and all of that stuff. But the protocol is different, because the protocol is crypto. So the cryptocurrency tokens have their own value that is separate than the value of the shares of the company, right?
Yes.
Because the shares of the company are only reflective of the value of the company. And the value of the company may or may not be linked to the protocol that the company created. It's definitely not linked one-to-one. And that's the complication that's here. So, every blockchain company may or may not have a company that's linked to it. Or sorry, every cryptocurrency may or may not have a blockchain company that's linked to it, right? And, some companies don't have a token, and it's just they use blockchain, but they have no token. It's just a company.
Yeah.
Because there's no token.
Yeah.
So it's just that when there's a token, it's separate than the company. And the key is just, my reports and my analysis is just to talk about the currency itself, or the token, or the blockchain project.
Yeah.
And, the performance of the company would be reflective of the price of the token, because everything affects everything else. But, they're two separate things.
Yeah. Because like I say, I mean, that isn't actually that straightforward at all. Like, that really is not straightforward, like, at all, do you know? And nope. I think to the average investor, that can be really hard work to get their head around, do you know? Because obviously they will have conventional systems and techniques to analyze, to due diligence a company, and to go through numbers and to model and forecast and think, right, can I earn 10x in 5 years? Yes or no? But when we're talking about protocols and how the company's value is different to the token value, it becomes very difficult to really understand and analyze and model and forecast and actually invest, And I think it's part of the challenge that comes with investing in blockchain companies.
Bitcoin, when it came out, it had no company. It just had, quote unquote, Satoshi Nakamoto, who coded something, and it went out to the wild, and then software companies that exchange, or people that exchange this thing, would have a certain demand and supply. It's demand for it, and based on the demand, that's why the value went up, and that's it. There was no company, and so I mean, it's just that now people are doing that, and they're creating a company. It's like Joe Blow creates a company and creates a copy of Bitcoin, and the copy of Bitcoin may or may not be $1 billion, but it may or may not be linked to the company as well, right?
Yeah, sure. Yeah, sure. That's actually very, very interesting, isn't it? It's really interesting, that kind of double layer effect of the blockchain space and the companies. Because you have the companies and you have the tokens, but they're actually mutually exclusive, but they're kind of also linked together, because the actions that the company takes affects the token's price, and the token's price affects the company's actions. So there's definitely a link there. Do you have any examples of cases where there's been real mismatch between the company's value and the token value?
Yeah, I have one. So, I mean, lawsuits are a good example, right? Because, so one that affects the company and not the token. Well, I mean, when a company has a lawsuit, which are very common, like, you have Tezos, and I'm not calling these companies out. I'm just going over history. So you have, Tesla's, for example, and what was another one? And I believe Augur had some media trouble. And, a lot of these companies are not publicly trading anyways. They only have private investors at most. And so a lot of the things that go on in the company may not be reflective of the network. So Augur launched their tokens in their prediction, prediction market. So a long story short, people bet on future outcomes, right? And what happened is that, not to get political, but people started saying, Trump will get assassinated and stuff. What do you think? Yes or no? So that started happening. The Augur, the Forecast Network, I believe Forecast Foundation, they clearly said, so if you check it out, they clearly said that we are not Augur. Augur is a decentralized group of people, and Forecast Foundation is just a company. So they, just to remove their liability for what people post on there, they did that. And the reason why was because it's decentralized, meaning there's no censorship. People can say whatever they want, and it's just software.
Yeah, for sure.
So that's kind of the separation. So, when it goes into legal matters, just to say if you're making it decentralized and censorship free, and you want to keep an open foundation, then that distinction has to be really clear. All right?
Yeah, sure. Yeah, definitely. That's really, really important. And yeah, that really is quite interesting, because I think that's also, again, the nature of decentralized companies is that nobody is responsible. The network is responsible. And how do you allocate liability to a network of decentralized people across nodes across the whole globe? So yes, that is both the strength and weakness of decentralized companies in the blockchain space in general, is that it's beautifully decentralized and open, and you can have this exchange of value without regulation. But at the same point in time, there still is a strong argument for regulation and being responsible and taking ownership of actions that take place on the network. And it's really interesting. I think this hasn't really happened before. And I think that's the reason why there's so much interest, insecurity, excitement, anxiety that comes with companies, investments in this space, because we are really, moving into uncharted territory, And have you come across any real success stories in terms of this then, in terms of decentralized companies and raising rounds of funding? Because obviously we're not thinking about conventional series, C, D venture capital rounds. We're thinking about different ways of investing. So have you come across any particular success stories that have successfully raised capital from VCs outside of conventional ICO, STO, IEO?
Yeah, I mean, a lot of it has to do with, one story, again, not financial advice, but, what happened, I continued to make reports for a company called Unify, and I learned a lot. And, of all of my reports, I think I did about 70. Of all the reports, there would be a 190%, so 190% return. So it's like the one company that got the biggest return was Engine Coin. And, I interviewed Vidtech there at the company, the CTO. And this was before they got the announcement went out that, yeah, they'll be on Samsung's phone. And after that, then it led into a big boom in value. I think at 10 times or plus 10, 20 times. I can't really remember. Shift in value there.
Mm-hmm.
So, I mean, people are really happy about this. And, sometimes it's just about the post-exchange strategy. However, the problem is that there's a lot of speculation because a lot of these projects are early stage, meaning that the value of the token is not mostly reflective of the price. So I mean, that's also something else to consider.
Yeah, sure. And that's it, because it's a lot of forecasting and a lot of speculation. And because a lot of this isn't actually grounded in reality yet, how do you make assessments? It's not really possible. Is there a set of tools that you use to go through assessing this?
Oh yeah, no, definitely. So I mean, professionals do this. I mean, Placeholder VC with Chris Berniski there, he has an entire valuation framework, and the oldest cryptocurrency valuation frameworks are in the order of like 3 to 4 years old.
Mm.
So I mean, it's very new. But I just do a simple analysis where I go through, what I believe the market timing, the team, the reachability of the project, the business use case, what else? I'm just going off the top of my head, and I just rank it in a simple decision matrix. And it's an iterative process like everything else. And so far that's been working. You tend to see patterns, and I believe, the timings, markets, the part of the team and the partners, part of the problem that's being solved, part of to see if like how close is it to being a product, because some projects have their value being 100% speculative because the token associated with that project has not launched quote unquote mainnet, and that all that means is that they haven't launched their thing yet, but they're still trading, and that's many projects, and so that's part of it, and those are the ones off the top of my head.
Yeah, it's really interesting. So what do you think then in terms of the space investment, the portfolios, bringing investors together with companies? What do you think, how will this look in 24 months, for example? Do you reckon by that time there'll be framework, there'll be regulation, there'll be easy access for investment into blockchain companies? Or do you think that there'll be a fourth gen essentially of investment models that actually are on the blockchain? What do you think?
Oh no, absolutely, yeah. So I mean, I know for a fact the Canadian government is working with Ethereum, and I know that we see banks that are issuing blockchain based companies. A lot of it comes down to money, because they're going to see how removing middlemen is always cheaper. It's always cheaper, and that's what blockchain. That's the core value of the blockchain: removing middlemen. And I look at the like when you go back to things like 3D, genetics, AI, nanotechnology, and all these things, you tend to see how the big problems are being solved. It's just a matter of adaptation. And but in 24 months, So how would this look? I mean, I can't really say, but I say a lot of projects would die out. I'd say all of the talent would shift to a few projects, developers and such. They will all shift to the big projects that are actually launching and solving problems. And I would say for regulation, I would say that the government would be very slow to issue smart contracts as bonds and things like that. Like, I know people want it to happen, but it'll take time because the government is slow. So I don't think it would happen in 24 months. But in terms of the companies, I think that, you're going to start seeing companies with real value. Ethereum plans to use proof of stake. They plan to increase their transaction speed by, I believe, 10 or more times. So I mean, I think a lot of projects would die and a lot of the talents would shift to those projects.
Yeah, awesome. And I think until then, we'll just have to play it by ear and do what we can to invest in these interesting companies, even if it means taking on extra risk, potentially.
Exactly. That's the game, right? And, without risk, there can't be, there won't be any 3D, any genetics, any AI, any oil. So, I mean, that's how it happened.
That's true. And just a point as well, I think it's quite interesting because you mentioned removing middlemen, but your role essentially right now is being a middleman to broach the connection between blockchain companies and VCs. What do you think about that?
No, I find it funny, and I always say this. I'd say that I like it.
Do you know what I mean?
Yeah, no, it's amazing, and I always tell people this too. I say, I was talking to some lawyers and stuff, and I was joking about this. How would an automated broker be? Well, I mean, an automated broker would be purely in the blockchain. Luckily, human relationships are pretty valuable. So, I mean, that's basically what I'm writing on. And I find that hilarious. And you see privatization amongst some of these companies and opaque information. And you just ask the question, okay, so where is the decentralization? And I think part of it is also there's a bit of duality that needs to be kind of looked at, because I was always saying, for the blockchain companies to be adopted by the whole world, then governments are part of the whole world. So you see what I mean? So it's really it's really mixed. on that end.
I'm just thinking, because if everything was decentralized and government still had a role, essentially governments would just become nodes, peers on the network that have lots and lots of coins, essentially. You know, like basically, if they were able to influence change on the network, they basically would just be nodes that have large amounts of coins that can then make decisions, essentially. And then if they have enough coins, it then becomes centralized again.
Yeah, I mean, the U.S. Treasury could. What if the U.S. Treasury just buys all the freaking Bitcoin on Binance or whatever, right? Or buys all the or buys some small protocol, then and you know, when you look at Pareto principle, you look at, you know, the movements of people around the world. It's always you know, focused in one spot. So I mean, I don't know. It's going to be interesting.
Yeah, because the assumption is that the distribution of wealth and decision making across the network is somewhat dispersed, right? It's distributed quite hopefully evenly, so that facilitates a decentralized architecture where people can have a say but not have too much say. But you know, we always see with these systems and networks and distribution schemes, you know, Pareto's law comes into effect, where quite often the square root of the population own half the value. And that example, that actually is seen with Bitcoin, where, you know, a small majority of people own like a large amount of the Bitcoins. And that happens across all of these decentralized networks. And I guess my concern is whether actually we can really achieve decentralization, because whenever we have an architecture, whenever we have a blockchain that comes up, there's always a cohort of individuals that have most of the value and decision making power on the network. And that seems to be a real theme. And I'm not sure, like, ultimately I'm still learning. And right now I haven't really seen an example where there's full decentralization, because we know that proof of stake does have its flaws, and that if you have enough money, you have enough tokens, you can have as much power as you would as in a conventional centralized system. So what do you think about that?
Yeah, I mean, many things, and I love that. I love that, you know, that sentiment you expressed. And you know, I'm a big fan of decentralization, and you know, I look at, in terms of the proof of stake, yeah, like Decred. I advise you to take a look at Decred after, because it's you know, they have a hybrid proof of work and proof of stake model that tries to address it. But honestly, like, you know, I think it may be more, this whole blockchain thing may be reflexive of more of social waves. You know, when you look at, you know, the invention of the printing press, you know, so that, you know, instead of the church having all the power, you know, you could have it so that, you know, people could, you know, freely go out and read whatever they want, and read you know, scriptures, for example, and interpret them as they desire. So that was a form of decentralization. And you have, you know, open source, where, you know, rather than private companies coming in and making all this stuff, you have private companies where people build on each other. You know, you have these different social waves throughout history where it's like, oh, you know, like the French Revolution, you know, you guys have all the power, you know. And I look at all these things and it's like, perhaps this is just a social wave. And I think it's probably the truth sits somewhere in the middle, as with many things, where, you know, there is a hybrid, because, you know, a lot of the greats always creates, you know, they always have capitalist mentalities, you know, who create these large companies, and some of these companies are in blockchain. You know, so I mean, it's a bit of a I don't, like a kind of like an anti-pattern. It's hard to explain, but yeah, there's a bit of both in this.
Yeah, I actually understand that for sure. And I think looking through history, I also see a patterns emerging, where there seems to be this gathering up of material and resources and power. It gets to a certain limit, and then people push back, essentially, and then power then is distributed across the peers in the network, or across society, or across France, for example, you know, as an example in history. And then there's a reconsolidation of power in new forms and in new ways. And it seems as though this literally is just a kind of a trend across societies, across time, that power is distributed. It then kind of gathers up and becomes consolidated. It then becomes centralized and focused. There's a pushback, a destruction. It falls out, redistribution of power, wealth, and resources, and it happens all over again. And again, I'm not sure. I don't know. But I wonder whether the race to decentralization is another form of that cycle done in a different way. I don't know, but when I look at the landscape of companies and tokens and what's happening out there, we have a capitalist regime that seems to be working relatively well, where people are able to compete to accumulate resources and power and wealth and then become centralized. But obviously, when some individuals or some groups of people gain too much wealth, too much power, too much resources, that's when there's that inversion which takes place and that's redistributed again. And then new projects, new companies start up. So I think, I'm not sure what I think really, but this is what I'm seeing. And it seems that you're also seeing a similar thing, right?
Yeah, and there's also the transparency aspect where people were frustrated with the lack of transparency, and then open source came up, and a lot of the blockchain leaders are open source fans, right? And here's the paradox of open source: is that everyone can code it, but to code it, the people that are trusted the most are the people that code it first, and the people who understand it are the people who can code, and the people who can code, you have to know the language and you have to know how the class was designed, how the architecture of the code was designed to actually work on it. So I mean, that's the paradox of open source, and that's a paradox of blockchain, because 99.9% of these blockchain projects are open source. So I mean, the thing is that it's supposed to be like me and you. We can read Bitcoin's code, we can read Ethereum's code right now, and go into GitHub and even look. But it's like, if I want to issue my order of, I want this to be decentralized, I'm probably the one, and making it happen, I'm probably the one that owns most of the tokens, which is interesting. So yeah,
it's the same thing again. It's that praise distribution of power, wealth, and resources. Because again, with the open source example, there probably is a small cohort of people across the whole network of peers in that particular network that know how to actually do those tasks and read the code and build and design it. So it essentially is the same thing, just rebranded. That's kind of interesting. We're kind of diving into the philosophy of decentralization and open source now, but it's interesting how we're kind of uncovering the fact that this distribution of power, wealth, and resources seems to proliferate across this architecture as well. And I'm interested to see how this will play out over time, and if we actually ever will achieve decentralization, because to organize society, you have to have decision makers. We have to have people that make decisions, people that have responsibilities and liabilities, and people that actually create value. And I wonder how those roles will evolve over time.
No, absolutely. And, the difference in real life, I'd say I've seen all these white papers, and some of them criticize Bitcoin's mining because of mining pools being created, where the people with the most computing power join together to be able to validate transactions on the network, which means you have to power the network.
Absolutely.
Hence the 51% attack.
Yeah, absolutely. And can you blame them? Can you blame them? If you're willing to put 20 million down on a mining farm in the Antarctic, well, fair play to you, But again, that's the same problem with consolidation of resources, power, and wealth. And so I think we're kind of touching on, we really are touching on those fundamental issues now, aren't we? Of what we're trying to achieve with blockchain and decentralization. We're trying to achieve this ideal, but I'm not sure if we're quite there yet. And in the meanwhile, the VCs and the people that have large amounts of capital to invest in these companies are trying to figure out how to actually broach these conversations about investment, given the complexity, uncertainty, lack of regulation around these companies. So to take the next step of the distribution of wealth, power, and resources across society, it needs scalability and it needs money. But to do that right now, it's not that easy because of the regulatory concerns, the gaps between investors and the companies. So we're at this kind of sticking point, it seems. Would you agree with that?
Yeah, I mean, things are still moving forward in terms of, not to toot my own horn, I'm working to become one of those people to, go on the inside of the traditional financial markets with, the understanding of blockchain. And, a lot of advocates like, Outlier Venture, they're teaching people about system design, sound system design, and how to build your project so that you incentivize people to make it relatively decentralized, so that you don't run into all of these things very early in the lifetime of the project. And we see STO IAOs and STOs evolving, where there's a big trend of asset backed and real estate backed tokens. So that's most of STOs are going to be real estate backed. I'll just tell you now. And the IAOs, they're evolving, where people are trying to make the NASDAQ of cryptocurrencies, where they're high standards. They choose projects of good value. So these things, and along with, most importantly, blockchain projects getting closer to solve big problems, will be the determinant of how far things happen, how far things go. And those who understand it are the ones who are going to win, and those who help it happen and build these projects are the ones that are going to be the future, like the next oil, the next railroads, the next steel. So
yeah. So we're saying that change is being created and innovation is taking place, but how would you convince me and convince? Well, I'm not saying I'm skeptical, but given the trends we see across society in terms of wealth, power, and resources, given the trends we see in centralization and decentralization, how would you convince a person with that mindset looking at this landscape, thinking, well, it looks kind of the same as the previous model? How would you convince them that it's not the same as the previous model?
Well, I mean, what's funny is that I was actually thinking, if it is, then I think that's the beauty of it too, in a way, because one, it may be getting us slightly closer to it, and two, it look how well the printing press did. Look who won the French Revolution, and look who went through. Look what open source has done. It created Linux. So I mean, if it's one of those, another one of those, then I think it will be good, because it will be that next form of value. Like, look at Uber made kind of a decentralized network of taxi drivers, but
yeah, true.
And then now people are trying to create decentralized versions of Uber, where
true,
where there's no one database that controls all the rules and does kind of some legal manipulation. So I mean, maybe it's another iteration, and maybe it's not a one-stop shop, but maybe it's just like the new car or a new iPhone. It's like a next iteration in that step. And secondly, the purposes of blockchain are multifold. You have the ideas of transparency, where things are more transparent, even more transparent, because you can actually see the database, and people have to agree on what happens in the database. And you see, iteration when it comes to finally, when it comes to middlemen. So I mean, you send a transaction to somebody, or you have like your lampshade company, and you're tracking the supply chain of the lamps. You want your customers to know where the lamp's going. Is my food being tracked well, etc. And so those problems of customer trust will be solved. And so I think it's just an iteration.
Yeah. So I think you've kind of fleshed out the main benefits and the main strengths of this movement, and I think we also have pretty much fleshed out the major risks and drawbacks in terms of regulation and risk and time and cost to actually do listings for token offerings, for example, and the complex that comes with companies and protocols. So yeah, I feel pretty happy with that. And I think that our listeners too, would have gained a lot of value from this conversation, because I know that I shall have, in terms of understanding what you've seen in the industry. So we're coming up to time now. Is there anything in particular you'd like to say or points you'd like to address in regard to our conversations thus far?
Well, I mean, first off, I just want to thank you for having me on this. Like, really, really nice change up. Discussing with you, and really, really insightful questions. And I also want to just say that blockchain companies in need of funding. I'm still here to help. Feel free to hit natuinnovations.com/funding, and when the license goes through, I'll send out the services for you. But for now, just submit your company information, and then we'll be in touch when the time is right. And I'm just working on building a compliance network of investors, and I'm still working on that. And I have some big plans to automate how I like some of these investor attraction methods. So yeah, going into the next year, that'll be really big, and I look forward to seeing if this bull run is a false flag or if it's real. So that's pretty much where everyone should be looking right now.
So just again, thank you all for your kind words as well. Just thinking the bull run, what pointers, what key metrics are you looking for to indicate that the bull run actually is real and not a false flag?
I mean, one thing is, I come from, in terms of looking at these patterns, I come from more of the fundamental analysis approach rather than the technical analysis approach. But, one VC firm, if you check out Kintaro Capital's website, they have a good technical, kintarocapital.com with a K, KINTARO capital. And they have a good technical analysis piece. But personally,
Cool.
The book, The Intelligent Investor, going back to the old school, is that they say that the market is always, an emotional man. It's always extremely biased. And what I'm doing, I'm just looking at the market sentiment and trying to determine, what is the market sentiment? And when the market sentiment inflects, then that's usually good. So, it's just a matter of watching people's sentiments. And there are a lot of good tools. There are some AI tools out there for free, and there's Buzz Sumo is pretty good. So there are a lot of tools out there to see the market sentiments, and sentiments often, tends to reflect people's activity.
Yeah, for sure. Yeah, that's very, very interesting. So again, thank you for your time, Natu. It's been an interesting episode today. I think we've covered like a lot of ground, and I think that we've got a lot to think about now. Let's catch up in 18, 24 months' time and see where you are with Natu Innovations. I think it'd be really, really interesting.
Yeah, that'll definitely be interesting. I wonder where I'll be. Crypto moves fast. So it's been nice having you on and talking with you right now. It was really fun.
Wicked. Well, good luck with your journey, and we'll catch up soon. Cheers, Natu.
Thank you, Hasani. Have a good one.
Bye-bye. Cheers.
Cheers.